Hi to IPO subscribers. Welcome to eaglelive.ai. Today, let us review IPO from Sunshine Pictures, a main board IPO. Here we go on IPO review. As I have been telling your people, for any company, the fundamentals of the company is very important. Without fundamentals, there is nothing what a company can achieve. So it should be strong. Now let us see what is the financial status of the company. This financial status of the company has been generated by AI-powered software. Based on the metrics given to the software, this company has been categorized as a healthy company. Let us see what are the financial strengths that made the company a healthy company. So first we go for health analysis, in that solvency. Solvency means solvency ensures the sustainability of the company. So here all the metrics are positive. So that is the reason solvency is strong. Next, coming to liquidity. Liquidity ensures the survival of the company. So here also all are very good. Currently she is 4.7, but liquidity she is 2.3. It is very strong. Liquidity is strong. Coming to operational efficiency, only one receivable turnover is a little bit below the levels. And coming to working capital turnover also very less, should be in general more than 1.5. More than 1.5 it shall be some lesser value. We have taken 1.5. It is less than 1.5. This is a little bit negative, sir, moderate. And coming to financial irregularities, that's the financial frauds. No, zero. No financial frauds. Good. EBITDA 58.56, EBIT is 55.83, PBT is 54.06 crores, PAT is 40.07, cash profit 42.79, EPS 15.19. Very good. Very good amount. EBITDA margin 76.75. Wow. Our net profit margin is 53.77. Very good. ROC is 36.5 and ROE is 31.99. So book value is 55.08. Very good. Company are considered to be a good company. And cash flow from operating activities is minus 33.21. And net cash flow for the year is minus 11.16 crores. Cash flow is a little bit concern. So that is the only thing. And coming to market value, the market price 360 is the cap price. So based on the cap price, price earning ratio is coming to 23.69, almost close to benchmark levels of 25. And coming to price to book value, it is 6.53. It is a very high. So it should be less than 3. And let us see the projected one also. Then we can have an opinion on to go ahead or not. So growth indicators. So the somewhat for negative sales growth is minus 27.9, and coming to EPS growth is minus 16.13 growth, and sustainable growth is negative. So anyway, 16.22. In general, we expect 25. It's okay. So this is the financial status of the company. Company is a healthy company. So a healthy company means one thing is what we should know is, in general, corporate governance also good benefit. So the other benefits of healthy companies, inbuilt safety, good returns, and appreciation feature value. Now let's go for IPO review. So here is the IPO review. Sunshine Pictures is coming with an IPO of 282 crores. The company has delivered successful films like The Kerala Story, Force 2, and Commando 2. But the key question is, investors is the IPO valuation attractive enough? Of course, that is very important, but most of the investors, they don't see that one. The IPO is scheduled to open on 18th August 2026 with a price band of 340 to 360 rupees per share. So business overview, let us first understand the business. Sunshine Pictures is a content production and entertainment company covering film production, web series and television content, music and content distribution, digital entertainment, monetization and distribution of content rights. The company has worked on well-known titles include Force, Holiday, Force, and Commander 2 and the Kerala Story. Its current business platform also spans production, distribution, music, and digital content. Let us see key business strength. Sunshine Pictures has demonstrated that it can create commercially successful content. The Kerala story was a particularly strong success and highlights the potential for very high returns from successful projects. Question. But remember, entertainment is a hit-driven business. One blockbuster can dramatically improve earnings, while a few unsuccessful projects can hurt profitability and cash flows. So IPO and the use of funds. The total IPO size is approximately 282 crores. First issue 172.8 crores. Offer for sale is 109 crores. Total is 282.14 crores. Price band is 340 to 360. We have already discussed. Fresh proceeds will be primarily support working capital with the balance going toward general corporate purpose. Working capital is good, but there is one risk that we will discuss later. Important point. Almost 109 rupees 110 crore is an offer for sale. That money goes to the existing shareholders, not to the Sunshine Pictures. Therefore, investors should focus on whether the 178 crores fresh capital can generate sufficient incremental earnings and cash flows. Coming to valuation, the big question is now comes the most important part, valuation. At the upper price band up to 360, EPS is 15.19, PE is 23.70, PB is 6.5. And this is where I see the major concern of course. PE 23.7. On PE basis, the valuation is not extremely expensive, but it is certainly not cheap. So, see, the company is not leaving much future earnings to the investors. PB 6. However, investors are paying around 6.5 times book value. This is significant premium and requires strong future profitability and return on equity to justify. My valuation view, PE reasonable to slightly expensive, PB expensive, margin of safety limited. Therefore, at 360, I would classify Sunshine Pictures as fairly valued to expensively valued rather than undervalued. Of course, financial quality. Financially, the company appears healthy, but there are some important warning signs. Positives, established content portfolio, successful track record, opportunity from India's growing digital entertainment market, and fresh capital for working capital. Concern, historical negative operating cash flows, earnings can fluctuate significantly, receivables require monitoring, film production is inherently unpredictable. Future earnings growth is difficult to forecast, of course. Investor takeaway, profitability is important, but cash flow is even more important for this business. Promoters and governance, promoters holding remain strong. Pre-IPO 100%, post-IPO 74.84%. Very good. This indicates significant promoter ownership and alignment. However, investors should monitor related party business and transactions, particularly because of the presence of business operating in the same sector. Of course, market sentiment. Now let us look at the current market sentiment. The broader IPO market is currently active, with several companies coming to the primary market this week. However, market conditions are also facing uncertainty from geographical development and credential volatility. So, Sunshine Pictures sentiment, business story positive, brand content recognition positive, IPO interest positive, sector risk moderate to high, valuation cautious. So recent gray market indicates have been positive with the media reports noting GMP signals around the mid-teens before the IPO. However, GMP is unofficial and can change quickly, so it should not be treated as a fundamental valuation indicator. Overall market positive but cautious. Key risks. Before investing, keep this risk in the mind. Hit-driven business success depends on audience response, cash flow risk, historical operating cash flows weakness, valuation risk 6.5 PB provide limited margin of safety, ending by volatility. Film by film performance can create major fluctuations. Receivables risk. Outstanding receivables need monitoring and related party risks. Same sector relationship requires investor attention. So, for final investor view, so what is my overall view? Business quality good, growth potential good, financial quality moderate, valuation expensive, market sentiment positive but cautious, risk moderate, high, overall score 6 by 10. My verdict, cautious and wait and watch, sorry. Sunshine Pictures has a strong content portfolio and attractive industry opportunity, but at around 23.7 PE and 6.5 PB, the IPO does not provide a large margin of safety. Of course, for listing gain investors, positive market sentiment and GMP could support interest, but GMP can change rapidly. For long-term investors, I would prefer to see sustained earnings growth, stronger operating cash flows, and better valuation comfort before become aggressively positive. Final question. In Sunshine Pictures, IPO worth subscribing to? My view, subscribe with caution, not a deep value IPO. Good business, strong content portfolio growth, opportunity, valuation concern, cash flow risk. Remember, a good company is not always a good investment at any price. And for Sunshine Pictures, valuation is the key factor to watch. Thank you. Thank you very much for watching my video. Thank you.